Everybody, welcome to another episode. Today, I am happy to have with me Lior Gantz. He's the founder of the Wealth Research Group. Lior, I am so happy to have you back here. I'm glad to see that you're doing well, and I'm excited to talk to you about all things like mining stocks. You ready?
Let's go.
So listen, 2011. I think
Okay.
the resource sector, it's been pretty much underperforming. Many
Yes.
geopolitical factors are at play here, and I know since then there's been a lot of changes, a lot of things that have been happening that have been making mining stocks a lot more desirable for people. And what I wanted to do is get the word out, and have you on to talk about why this is, what trends are essentially causing, um, you know, this time in 2000, what are we, 2023, almost 2024. Why is it like a really good time that people should be getting in on some mining stocks, specifically gold?
Yeah. Um, okay. Part of what's happening right now, and you're very right. So let's start with the basics. The mining sector has been underperforming for 12 years now. When you look at ratios such as the gold to GDX, the gold to UE, um, and other ratios, even between general equities, so with the QQQ and gold, etc., or down gold, they've been underperforming for many years. So gold has been underperforming the tech sector or the biotechnology sector, and gold companies have been underperforming the underlying commodity. And I remember when I started to invest in mining companies, it was late in 2009, early 2010. And those were two glorious years for mining companies. Uh, Companies would double, triple, quadruple. They would go up 5, 6, 7, 800%.
Why is that? Were
Um,
they just find just a lot of discoveries and a lot of output? Like, what was happening?
well, the, and that's what I'm getting to.
Oh,
Let's
okay.
try to find the common thread between then and now. Um, it happened again in 2016. In early 2016, January 2016, the mining sector really exploded for 8 months. It was um, it was so unique that even Switzerland's central bank had a mining portfolio,
Okay.
and even the Danish central bank had a mining portfolio. I remember that because those were the first few publications that Wealth Research Group authored. When our newsletter just got started, we penned a letter about the mining portfolio of the the Swiss central bank and the Danish. It was unique. Um, but those were 8 short months. They ended, and I remember it vividly because I was at the hospital. My wife gave birth to our first child, and uh, I remember the mania during that entire month, and it was over. By September of 2016, the mining sector had peaked, but for 8 months, if you look at the GDX, the GDXJ, and if you look at individual companies, it was incredible. Some companies went up 5, 6, 700% in 8 months. And so in 2016, at that period in September, the mining sector stopped rallying. It almost felt like a false breakout. Um, and what we saw in the early Trump years, so between late 2016 and 2018, we actually saw the gold sector underperforming again. And September 2018, when Powell started to talk about rate hikes on
Mm-hmm.
autopilot, that really created a bottom for gold because that is the worst thing that uh,
Right.
uh, for the price of gold. If central banks just keep raising rates and creating a positive real rate environment, meaning that rates when you discount inflation are still positive, then there is no incentive to own gold.
Right.
Okay. Um, and as the monetary U-turn happened in 2019, the gold sector again started to rally, but then came March 2020, and really everything got decimated. Gold stocks,
Mm-hmm.
everything, and then you saw a rally. Um, the entire operation of saving the economy with stimulus created borderline hyperinflation and raised rates into present day. What is my point of detailing this history? Gold, and especially gold stocks, which correlate much more to silver's performance than gold, they excel in times of extreme easing of financial conditions. In other words, the best trade is to get into this sector if you're looking for the mining companies, not for just buying the physical gold or physical silver. But if you're looking for the exponential type returns, you need to be a trader. This is not a buy and hold mentality.
Mm-hmm.
These are boom and bust, and they go from extreme undervaluation to extreme overvaluation, etc. They have a high beta. They don't trade,
Steadily.
like steadily, and they don't trade like bonds. They really are very volatile. The game is about catching those moments
Mm-hmm.
when you ease financial conditions drastically. In the post '08 era, so in other words, March 2009 until September 2011, it was a huge easing period. You had QE, you had rates going to zero for the first time. They were trying to reflate the entire economy. That was a huge easing moment. Um, a second easing moment was December 2015, the Fed meeting, and what they announced is that they are going to start raising rates after 8 years. For the first time, they're going to go from zero to a quarter percentage point. Reason: the economy is too easy. So when the Fed literally signaled, "Hey, we have a very easy economy," gold stocks started to rally in 2016. That was the gold bottom. December 15th, 2015, the FOMC meeting, the Federal Reserve created the bottom for gold at $1,081 an ounce. Um, and so, again, with the monetary U-turn, you saw extreme easing of financial conditions.
Mm-hmm.
The markets first rejected the Fed's autopilot in December 2018. If you remember, it was the worst December for the stock market since the Great Depression. Literally, the S&P 500 went down 20% 1 month. Trump and Mnuchin, they had to call all the major banks and see if there was something that they were missing. Like, what is this?
Mm-hmm.
And then we saw easing, and of course, after the after the Fed announced that it's going to buy all the junk bonds in the economy, that was a huge easing moment in May of 2020, and it sparked this 3 month incredible rally in gold to an all-time high in August 2020. Here we are again. The FOMC meeting in November, just a week and a half ago, they started to talk about easing, but they left the door open to more tightening. And they said, if inflation, becomes a problem again, we will hike. So you're not quite there, but you have 90% of the indications. And I can tell you that Goldman Sachs just issued a report where they say, don't think that this is over. Don't think that the Fed is going to allow things to ease further. But I think they're wrong. And I think that in December, the Fed is going to give further language to say that, we think most of the heavy lifting is over. We are not looking to tighten further. And that means that in 2024, you will see an easing moment. When I speak with my fund managers for real estate investments that I have, they tell me that right now it's literally impossible to strike deals.
Mm.
There's no lending, there's no borrowing.
Yeah.
The buyers want a 15% discount no matter what your price. Even if your price is already bargain prices, they come in 15% below. There's that entire economy, the real estate sector is frozen.
It's
So
completely locked up for sure.
so you will see easing back to normal, and that environment is going to be huge for gold companies. So, like I said, you have to be smart with this. Do not think this will last forever. When things look easy, when stocks double and triple in a month or two, that's your cue to start exiting.
Right.
That's not your cue to double down.
Right.
If you're too late, you're too late. Just don't chase this. But we may see a huge signal in the Fed meeting in December, and then as you know, trading is very light during Christmas. As January comes in, you will see if this is real or not. You will see how fund managers come into the year, what strategies they come in with. So, in my opinion, January, very super important to understand the framework of how this looks like. And yeah, it could be a phenomenal year. If you want to, I authored two reports. One about directly about this. If you go to wealthresearchgroup.com/boom, like BOOM,
Mm-hmm.
the positive type of boom, not like what we have here in Tel Aviv. So um, download that. It's a very fast read, and it underscores why and how I think one should um, structure his opinion around this. And then secondly, look, as always, if you want to check out my entire portfolio, just go to wealthresearchgroup.com/portfolio. That's literally my portfolio. If you're looking for like a fresh reference point to start looking at companies.
I appreciate the insight. Would you say that we are heading into an era where we might see silver and gold reaching their all-time highs based on the upcoming meetings?
I think yes. I think gold, yes. I think silver has a long ways to
Yeah,
go, right? It needs to
silver's far off. Yeah.
it needs to double. But if you're gonna if you're gonna pin me to a corner, I think that you will see an all-time high for gold next year. Um, at some point during the year, it probably will hit 22 or 2300.
Mm-hmm.
And I think that if you're looking for the high for silver, I think it will be anywhere between 29 and 33 for next year. And hopefully I'm wrong and goes all the way up to 35, but that's the higher end of the spectrum.
Yeah.
Um, Now the CME Fed Watch tool, which I hope you have open on your browser at all times, that shows you the probabilities of rate hikes or rate cuts going forward 2 years. So as it stands right now, the consensus on Wall Street is that the Fed will cut in May. And just so we all understand what it means. If they cut, it means in their minds that financial conditions have tightened enough, right? Think
Yeah.
about it. Have tightened enough so that they can ease.
Yes.
So it's a very important bullish sign for gold, but also for silver. And that's when I think silver will start outperforming gold. After the first rate cut, I think is when silver becomes a better um, trade than gold. And at that point, I think that the mining companies will have a phenomenal run. So between now and May is a great time
To be
to,
getting in.
to start accumulating, to learn the business, to understand this. And one thing I'd like to comment is between now and May, you have 6 months. It's 180 days. If you take an hour out of your day 5 times a week, and Monday through Friday, you make phone calls to two mining companies a day, that accumulates to over 300 or 400 companies that you can speak with. You will be able to ask questions, discern, understand, learn more about which management teams you trust, which management teams you feel like will treat your shareholder uh, uh, value in the right way, which companies have skin in the game for their management teams, which projects stand out to you, which are in better jurisdictions and better situations which are simpler in terms of their geology and technical and engineering, all of that. In 6 months, you can be a world class expert in the mining sector. It doesn't take more than, um, as I said, more than 100 to 120 hours on the phone with managements to really start to be a world class expert. Um, if you really study this, you will be able to discern the management teams that you trust from the ones that you don't, etc. And one way to start is to look at the GDXJ and the GDX, the very common ETFs, and start going through all of the holdings and start calling companies. These are mostly gold and silver companies, either in development or in production, and learn the business. That'll give you the best way to understand how you can, um, if you choose to, how you can become an owner of these companies. And as I said, if we are easing, then they're going to have a phenomenal year.
Also, I want to throw in another plug for you as well, that people can also get a lot of information from wealthresearchgroup.com. And you constantly are putting out such valuable information. I recently did a post on my channel, and a lot of people instantly just went right away, signed up, submitted their emails, and so I just want to thank you again that you come on to my channel and others within the stacking community to kind of give everybody some insight. And Lior, it's always a pleasure to have you on.
Thank you, and I appreciate the kind words.
Absolutely. I'll talk to you soon.
Thank you, sir.